Hi guys, welcome to GoldenEye. Today we are going to study another part of issue of share, that is forfeiture of share which were issued at par. On forfeiture, share capital is reduced and share capital account is debited. Let's start. Question: in 2010, Ganga Limited was registered with an authorized capital of rupees 1 lakh in equity shares of rupees 10 each. Of these, 4,000 equity shares were issued as fully paid to the vendors for the purchase of plant and machinery, and the remaining 6,000 shares were subscribed for by the public for cash. During the first year, rupees 6 per equity share was called up on these 6,000 shares. Payable rupees 3 on application, rupees 1 on allotment, and rupees 2 on the first call. The amount received in respect of these shares were as follow. On 5,000 shares, the full amount called. On 600 shares, rupees 4 per share. On 400 shares, rupees 3 per share. The company forfeited all those shares on which only rupees 3 had been received and reissued them at rupees 4 per share and rupees 6 called up. Journalize the transaction in the books of the company. Let's start the answer. Journal entries of Ganga Limited. Particulars: debit, credit. Ganga Limited purchased a plant and machinery worth rupees 40,000. So entry will be plant and machinery account debit to vendor account, 40,000 debit and 40,000 credit. And company, instead of paying cash for purchase of a machinery, company issued 4,000 number of shares of 10 each to a vendor. So entry will be vendor's account debit to equity share capital, 40,000 debit and 40,000 credit. Next entry of share application money received of 6,000 share. So entry will be bank account debit to equity share application account. Total number of share is 6,000 share and per share value on application is 3 rupees. So in this way we get 18,000 debit and 18,000 credit. Next entry on allotment due. So entry will be equity share allotment account debit to equity share capital. Per value of share on allotment is 1. So number of share is 6,000 into 1 rupees per share. So in this way we get 6,000 debit and 6,000 credit. Next entry, amount received on allotment. So entry will be bank account debit, calls in arrear account debits to equity share allotment. One shareholder holding 400 shares did not pay money on allotment. So in this way we will receive in the bank 5,600 rupees. How we get? So total number of share was 6,000 minus 400 share on which we didn't receive money on allotment. So remaining number of share is 5,600 into per share value on allotment is 1. So in this way we get 5,600. Calls in arrear, it means we didn't receive money on 400 share. So 400 share into 1 rupees, then we get 400. So total is 6,000. Next entry on first call due. So entry will be equity share first call account debit to equity share capital. So 6,000 into 2 rupees per value of share on first call. So in this way we get 12,000 debit and 12,000 credit. Next entry on receipts of share first call money. So entry is bank account debit, calls in arrear account debit to equity share first call. So total number of share was 6,000. Out of 6,000, on 600 and on 400 shares we did not receive first call money. So remaining number of share is 5,000 into 2 rupees share per value of share first call. So in this way we get 10,000 rupees. Next, calls in arrear account debit. So on 600 and on 400 shares we did not receive first call money. So total number of share is 1,000 into 2 rupees per share. So total is 2,000. So total value is 12,000. Next entry, share forfeiture related. Entry is equity share capital account debit to calls in arrear account to share forfeiture account. What value we will consider in equity share capital? So number of share forfeited into called up. So here number of share forfeited 400, which is mentioned in the question, into called up. Called up value is 6 rupees, which is also mentioned in the question. So 400 into 6, then we get 2400. To cost in arrear. So number of share forfeited 400 into 3 rupees, then we get 1200. To share forfeiture account. In this, so balancing figure value we will consider in this. So 2400 is the total, minus 1200, then we get balancing figure 1200 rupees. Next entry, reissue of share at a discount. So entry is bank account debit, share forfeiture account debit to equity share capital account. So here, instead of discount account, we will write share forfeiture account. So 400 shares into 4 rupees, then we get 1600, and in the discount we have given 2 rupees discount. So total value of called up is 6 rupees. Then we have received only 4 rupees, then it means there is a discount of rupees 2. A number of share is 400 into 2 rupees discount. So discount value is 800. In the next entry, we will transfer amount in the forfeiture account to the capital reserve account. So amount in the share forfeiture is the 1200. Out of this, 800 rupees we have used for discount. So remaining amount 1200 minus 800, then we get 400 rupees debit and 400 rupees credit. Now that this is done, if you have any doubt, then please let me know in the comment section. Thank you.